Hello, everybody, and welcome back to the Trader's Mind Chat live show. Today, we've got a very special end of the year live stream for you guys. 2021 end of year market wrap with interviews with Bobby and Steve from Disciplined Mind Trading. Welcome, guys.
How's it going, Mike? Thanks for having us on.
Yeah, appreciate you inviting us.
Absolutely. It was so awesome meeting you guys at the StockTwits Long Island Meetup. It really cool to meet people, meet cool people online, then meet people in person, offline, kind of see the real thing. It was awesome.
Yeah, it was great. I had a great time. It was great to see other traders on Long Island getting together in the middle of the pandemic, which I thought would always be tricky. Yeah, I had an awesome time, and thank you for organizing that. I think it was a great event, and I'm looking forward to the next one.
Yeah, absolutely. Long Island definitely needed a meetup group, so we're glad that you and StockTwits got that all together. So appreciate it.
Yes.
Yeah, well, 100%. So guys, I got to know you guys a little bit at the meetup. Tell us about how you got into trading. Maybe we'll start with Steve.
Sure.
Do you prefer Steve or Steven?
Doesn't matter. Doesn't matter. You call me whatever you want.
I call him trash on a regular basis, so I'm sure he'll accept either.
I get called everything. So my background, I was a finance major in college. So me and all my friends at that time were trading. Actually, it goes a little bit beyond that. Years ago, I did pools in the summer, and I used to make a lot of money doing that. I repaired pools, and I'm able to build pools, but nobody called me. I don't do that anymore, so I don't want to hear any suggestions on how to build pools or anything like that. And I had saved up.
Get started that way?
What?
Didn't Dan Zenger get started that way?
He did pools?
Yeah.
Get out of here.
Yeah,
I did not know that.
That's funny.
Yeah, for everybody that doesn't know who Dan is, Dan Zenger is the world record holder for swing trading. So great company in there. Maybe I need to get into pools.
Yeah. Well, I'll tell you, when you're 18 and 19 years old, it's the funnest job. So I had extra money. I didn't know what to do with it. I wanted to make some money because I keep hearing about the stock market. So I asked my father. In retrospect, it was the craziest thing because he doesn't know practically anything about stocks. So I invested in the stock. And then my uncle also was an active trader. And he's like, you should start reading this. And it was at the time, Investors Daily. So it was even before it was Investors Business Daily. And then from there, I was hooked on trading. I made my first trade with Citibank. I bought it at 20, sold it at 25. So I made, 25% on my investment, and probably within 6 months, and I was hooked from there. So that's my starting in investing.
Awesome. Yeah, you had a better experience with Citi than what I did with one of my friends that started to get into trading. This was right around where the banks were failing, and they were too big to fail.
Yes.
And looking at Citibank and thinking that it was going to come back, and that was back too when I was still kind of watching Kramer.
Yes.
And heard that Citigroup is too big to fail, time to get in. I ended up taking a small loss hit. He ended up writing it down about 50%, held it for 2 years, got out close to break even at that point. But man, that's a tough lesson.
Oh, absolutely. That's why buy and hold, I'm sure everybody knows it's just rough. You can make money buying, holding, but that in between the holding part can be super rough, and you miss a lot of opportunities at the same time. So.
Bobby, let's hear it. How did you get started?
Totally different than Steve. Like I had no interest in finance. I was like horrible at finance and math all through school. What really kind of started was I was working as an IT recruiter and services kind of like sales guy, and I'd be constantly meeting with my clients. And anytime something came up around stocks, I just felt like I could never add to the conversation. So one of my friends that I worked out with, this guy Keith, had introduced me to Steve. Steve is always the guy actually on the treadmill reading the IBD paper, which I didn't know at the time was the IBD paper. And he said, Steve knows some about stocks. Talk to him, and he'll, maybe he'll help you out. So I asked Steve. I said, hey, I want to get some background knowledge on stocks. Do you have any books or anything I could read? And he gave me Matthew Galgani's Getting Started: How to Make Money in Stocks. So that like thinner blue book. Read it that weekend, and I had like kind of poor visions of what the stock market was in general. Like I just thought it was rigged. I thought only people on Wall Street could make money, and it was just kind of all, just really rigged. That's the best word for it. And when I read that book, it finally like something clicked in my head. I'm like, this is a lot different than I think it is, and I think this is something that I could do, and I'm really interested in. So I talked to Steve, and I said, hey, what do I do if I want to learn how to trade? So then he gave me next book was Nicholas Darvis, How to Make $2 Million in the Stock Market. I read that, and then How to Make Money in Stocks, and that kind of started the whole learning process. And I was lucky enough that Steve decided that a bunch of the guys from the gym used to go to a Texas Roadhouse on Wednesdays to actually just meet for like it was a sirloin deal they had going. And he's like, look, we'll meet every Wednesday. Bring all your questions, bring any information. We'll go over what's going on in the market. We'll go over your questions, and I'll help you kind of learn, how to trade and how to trade cancel them. So thanks to Steve, that's how it all started.
Yeah, that's fantastic. And this is going back how long?
I've been trading now 4.5 years.
4.5 years. And Steve, you're trading for a bit longer than that.
Yeah, probably about 30 years.
Not enough fingers and toes.
Yeah, you don't want to hear that story. That's interesting because, like, I told you I got started with Citibank. My uncle gave me Investor's Business Daily, so I didn't read the book yet. Then I started, like, I had bought Walmart and Oracle and a couple other stocks. Then I read the book, and then I had unbelievable success right out of the gate. And then all of a sudden I started watching CNBC and doing all the things you shouldn't do. And I'm telling you, it was a journey. I started to think that value investing, I questioned myself. I questioned the book. I questioned everything. And I had a career in between there, which I still have. And I started drifting back towards cancel investing, like hardcore cancel investing, probably beginning around 2008 again. And then I really locked it down, and I didn't mix any more styles, probably about the same time that Bobby started investing. Like that if you want to talk about, we're going to talk about successes and failures. My biggest failure by far was mixing styles. I can't tell you, like, I have the highest amount of respect for Warren Buffett. And people on TV love to talk about Warren Buffett and value investing, things like that. It's just something that, as a smaller trader and someone with limited funds, you just can't do. I mean, he's got billions and billions of dollars. He does something completely different than we do. I'm not saying don't use his principles. It's just harder to do. And I think canceling provides you a unbelievable opportunity to make a lot of money on the companies that are in the bleeding edge of capitalism and in our society. So that's why I love canceling. Yeah.
Interesting. And I like that you pointed out the mixing of styles, and I'd like to dig into that a little bit more. So when you say mixing styles, like, there's a complete difference between your Warren Buffett style and your Bill O'Neill style, like kind of polar opposites, right? But there's that like that's separate from taking O'Neill and blending it with Darvis, maybe throwing some Minervini in there, maybe trying to like that's not what you're talking about mixing styles, or is it?
No. My styles were like, because all you hear on TV is buy and hold, and like Kramer and all that type of stuff. It was really more value investing, listening to hedge fund managers on TV. It's not having the conviction to truly trade one methodology. Like when you're talking about Darvis, to me, I think that Darvis was one of O'Neill's mentors. Same thing with like Livermore and some of the other guys. There's other guys that they mentioned where I think, and then I think Minervini, O'Neill was one of his mentors, and they may not have like mentored the way maybe I mentored Bobby, but using their, like, I consider Bill O'Neill a mentor. I met the guy once 30 years ago, and he thought I was going to be a great trader, and because I bought Cisco systems, and you know, I wish it was probably one of the few times Bill O'Neill was wrong.
Oh my goodness.
Yeah. But you know, mixing styles is a problem. Like you can't, it's just incompatible. Like, you know, this is actually a very fascinating topic to me too. Warren Buffett has a style. I've read so many books. I read his biography. I've probably read 10 books on Warren Buffett. I have the highest acclaim for Warren Buffett. But people don't understand has a different goal, and he's not an investor. He runs a business. So to consider him an investor, when he first started out, if you go back and look at what he did, you know, it's funny. I was telling one of our viewers this, you know, yesterday, the day before. He had a specific style. He would get out of stocks. He didn't have this buy in and just hold forever mentality. The reason why he does that now is he's got too many balls in the air. He's not sitting there looking at charts or actively trading. He's got like 80 businesses he's running, and it's very, very different. I mean, the media, you know, they're selling whatever they're selling, but just from experience as an investor, it becomes a distraction. You need to be completely focused on what you're doing. And this is where mixing of styles comes in. You've got to have the conviction of what you're doing, because it's so easy to let other people distract you and to let their opinions mix. You just have to block everything out. You have to, and this is why, one of the reasons why I love that you put together the meetup group. The more like-minded people you can talk to, the better it is for you, and the better it is for your investing. And that's another reason why I love YouTube. You know, meeting Dennis, seeing people on Twitter like Mike Minervini, Mike Webster, Jim Ropel, all those, you know, it's so helpful because you realize there are other people out there. When I started investing, it was me and my uncle. I don't know if I told you the story. So, I did say it, that he gave me the Investor's Business Daily paper.
Yeah.
I love my uncle. He passed away recently, but you want to talk about a guy who was like he would tell you he'd do IBD and then he'd be doing 10 other things. So like, he wasn't, you know, it was great that he gave me the ability to learn about IBD, but he didn't give me the ability to, you know, be as focused as I've been, you know, telling Bobby, you know, this is it. And also, Bobby wasn't a finance major. So like, there's some biases that you bring into it just from where your life is, that are very different for every investor. So why don't you tell about, Bob, how you were a clean sheet, how easier it was for you?
That was probably my biggest advantage. Like I had no Twitter, I had no like social media, nothing related to trading. I never watched the news. One of the big things Steve told me was just try to, especially when you're learning, like try not to have conversations about stocks with anybody, because the majority of the people that you're going to come across are just not going to really know what they're doing, and you're going to start taking some information from them and think maybe this is true, and it's just going to derail you. So I think that was my biggest thing. I don't think I really looked at any outside information besides the books I was reading and the podcasts that were directly related to me until probably 2.5, 3 years down the road. And at that point, I had, like Steve said, the conviction in the system, and I've seen that it could work, that now when I heard the outside information, I could say, okay, this doesn't line up with what I'm doing. I got to block this out. I think that was one of my biggest advantages, was that, you know, clean slate.
Yep. You know, you guys mentioned a couple of really good, like I'm taking notes as we're going too. Like I always end up with like pages of notes every time we have somebody on. Like, so, and I've already got half a page of notes from, well, what are we talking now? Like 15 minutes? Jeez. But one of the things that you had mentioned was that you must have conviction in what you're doing. I'm curious how what your process is for having conviction in what you're doing, or can you speak more to how does one go about attaining that? Well, what do you think?
you want to go, Bob? Or
I think a big part of it is just kind of doing the research and doing the groundwork. I constantly say
or in the
this.
system or what? Are you...
In both.
Mm.
I think, just if you take any information in general, whether it's stock related or not stock related, like I think too often people hear something and then they just take it for gospel once they hear it and just kind of run with it. And very few people take the time to really do the groundwork and see if whether it's a system or stock or whatever it is, what's really going on behind the scenes. So I think I tell a lot of my friends that they're, ask me questions about stock systems and how to trade and stuff. And I say, here, I'll give you the information, but you got to go out there too and look and see I always mention like some of the US investing champions, see the styles that they're using. There's all these research papers on different styles of trading, study charts, do the background information to really understand, okay, I'm seeing this actually work. I'm not just hearing somebody tell me it works. And the same thing with the stocks. It's like, somebody tells you, oh, this company's great. They're really growing and they got a great product. And no, okay, I'm going to go out. I'm going to find that information for myself. I'm going to listen to some earnings calls. I'm going to research the company. I'm going to find out what's going on in their industry and gain that conviction on my own through research. I think that's extremely, extremely important.
Mm. For me, I think one of the keys is that doing a post-analysis, you can see where your successes and victories are, and that when you do the system right and you follow the rules, usually you're coming up with a positive result or you've cut your losses. I mean, there are very few times that you get blown up using, to me, Can Slim. But when I'm not using Can Slim, like I said before, when I'm mixing styles or doing something that's deviating from it, that's where I usually have my poor results. And for me, it's over time. It's funny. I go back to this 30-year period. There are times where like I would use Can Slim and I would have unbelievable success. Like I'll give you, this is a great example. I bought Lululemon. I don't even know if I've ever told this, Bobby.
No,
the audience is sharing it on your podcast, Mike.
Awesome.
I bought Lululemon on their IPO base. I'll never forget it. Like everyone's talking about it, and I believe it like doubled within a month. I'm sure my time frames are off, but like things like that, buying Apple at perfect times, buying Google at perfect times, and then a lot of other stocks at that time. Waiting.
Yeah, here it is.
That's the IPO base.
Yeah, this is Lulu going back.
It's about 30.
2007.
I don't know. It may have split. If it's at 30, I bought it like right as it was breaking out. I think it went from 30. I remember making a lot of money on it.
A lot. Like after this decline, so this is a weekly. So you probably
I bought it right out of the IPO
too.
No, I bought it right out of the IPO. So that first little on the left, the far left-hand side. No, far left. I probably bought it right there. No, further left. I believe I bought it right there.
So like right out of this. Yeah, I love it when an IPO does that. Like it breaks out of a little flag area like this.
Yep, that's exactly when I bought it. Yeah. And then I never bought it again. That's a mistake. But I mean, I just remember, other stocks just having, really good success with it. And for whatever reason, it didn't register in my head to continue with it. I'll tell you, for me, interestingly enough, one of the things that made me stop mixing styles, and I recommend this to anyone. So in end of 2016, 2017, I started listening to podcasts. And one of the first podcasts I listened to was the Michael Covell Trend Following podcast. I don't know, Mike, if you listen to that. And one of the first things he started saying is, don't watch CNBC, don't listen to them. And it probably took me about 6 months to a year. And around that time, I stopped. I haven't watched CNBC. In fact, I don't even think I have it on my cable anymore. And from that time on, my investment results have gotten exponentially better. Because I'll give you an example. I owned Apple in the beginning of 2009. So right as the market was coming out of the tech bubble. And if you remember that time, everything that Apple did it was wrong. Nobody believed in them. And it would just make you question your conviction. And I knew based on like their sales grew through the whole entire financial crisis. Their earnings didn't, but their sales did. And then coming right out, they started getting 20 and 30%, maybe even more revenue growth and earnings growth. But everything on CNBC was negative. This company stinks. This company stinks. And it would make you question what you're doing instead of me. Like I thought they were a better source of information than what I saw on the charts. Like it didn't occur to me that they may be wrong and that the charts are correct. So, listen, it's lessons learned like that. But yeah, so really avoiding things like listening to CNBC. I hope that you don't have any sponsorships with them.
Not yet.
But those things like that have just been super helpful. Yeah, things like that have been just super helpful for me to just try to ignore the noise as much as you can. You could have as many trusted people, but as long as they're pretty aligned with you or understand what you're doing, I think that's really super helpful in getting your performance up to where it needs to be.
I think that's real key. That last point too. When you're trying not to talk when you're trying not to talk to most people, like being very selective with the people that you're going to work with, and talk to about this kind of stuff. I remember in the IBD meetup groups too, they fantastic. Like if it wasn't for them, like I wouldn't be here right now. But even in that, I remember this story of FLT, right? Let me bring this up. I think I told you guys this, but I don't know if I've told everybody else. So FLT, I bought this IPO too. What was that?
Which company is that?
FLT, Fleet Core Technologies.
Okay.
Basically, they make credit cards for the trucking industry.
Yes.
So, yeah, and had all the CanSlim characteristics. I bought it out of this cup. And I was talking about it at one of the meetups, and I was asking the guys, so what do you think about it? I'm one of the new people. They have a lot more experience than I do. And so they're like, yeah, they really just make credit cards for truckers. That's probably one that you're going to want to lock in your 20% on and call it a day. So I follow that. And how many percent later after that? Yeah. So 20%. So here's 20% roughly. And yeah, before even really breaching, that's the first close below the 50-day. Yeah. So we're in another 60%, but people could have the best, I share that because people could have the best intentions when giving advice. I think that when we speak with either when we should do something like more of a general kind of thing, I think that's advice that's worth listening to. Well, when people give advice that you should do this or you should do that, often, what I've experienced has been that more often than not, they're speaking from their own point of view in how they would handle something, and it may not, even though it's well-intentioned, may not be the best thing for you to do. So to have that awareness.
One of my favorite quotes is a John Wooden quote. It's oh God, what is it? Failing to prepare is preparing to fail. And one of the things that I've learned that is super helpful for me, because I think every investor gets into this, and that's kind of where you were with that. You probably didn't have the conviction in the stock, but had you prepared beforehand and knew what that trade was before you traded, what's your goal? Like we all know, there are certain times. I'll give you a really good example. Recently, I bought Pfizer.
Okay.
And my only goal was to be up 20%. And it looked like it was going to go more than that. So I actually pushed it, but it ended up, so I sold some of it at 20%, and I ended up selling the rest actually yesterday at about a 13 or 14% gain. So no one feel bad for me. But I figured because of Omicron and everything else, it was going to continue to go higher. I was wrong. But the point is that when you have, and you know, if a trade is a trade, or if a company has all the canceling characteristics, what you should actually be doing and what your plan for that stock is. So this way, we're human beings, and it's easy to get biased by other people, particularly like in this is a perfect example. Say in 2 months, when we go back to your meetup group, there's someone there who's, you know, Mr. Can Slim. He's super rich. He's had success. And he says something. Sometimes you believe in what other people say and then yourself. And this is actually a great story. And I hope my friend doesn't hear this. So in the beginning of 2009, Apple was one of my stocks that I invested in. And I had, like I told you, complete conviction. One of the reasons what made me sell it is I had a friend of mine who is a trader on Wall Street. He was up like 90% in 2008. Why? Because he shorted the market. Okay. And I just thought I deferred to his judgment more than I deferred to my judgment. So I started listening to him. And at that point, actually in August of 2008, I actually went to my first level 2 meetup, my first level 2 webinar, not webinar. It was actually in Boston, but it was one of the great things I ever went to. And, you know, it taught me a lot, but it didn't teach me how to avoid listening to other people. And I knew all the rules. I knew a level 2 gives you every tool that you possibly need to trade. And yeah, I just listened to him, and it was just one of the biggest mistakes I ever made. Not that his intentions weren't there. It's just that when you have a plan and you're deferring to other people, they don't know what your plan is. And you've got to execute your plan. You can't execute anyone else's plan. And that's really what the secret is. It gets back to Bobby and I love like Jocko and David Goggins. They'll talk about everything in your life is your fault. I mean, you could nitpick that, but that's really in trading. Everything is your fault. And if you try to place blame on, like, I don't place blame on anyone else. I place blame on me for me listening to those other people. That's where you begin to realize how to avoid mixing different systems and everything else. It's just taking accountability, I think, is probably one of the most important things. And that's really where you get huge growth in your portfolio and your results.
Yeah, 100%. Couldn't agree with that more. And if we are listening to other people's opinions too, like, well, what tends to happen is like people like we beat ourselves up like for doing that. I think that and like empathy, like self-empathy is something that I've been big into more often, and like speaking about it more lately, we're trying to understand the reason why. Like asking ourselves, well, why am I deferring to such and such person? And from there, like we're able to get a more constructive answer. I feel right. So it could be that like this person has a lot more experience than me, and so or I'm like I haven't done the research on this, or it could be any number of things, but well, what ends up coming back to us is more of a useful answer to start to figure out where can I start to plug holes.
Yeah. I think it's like one of those things where you just kind of have to peel back those layers and really see like what's the root cause of whatever that issue may be. Maybe it's a string of bad trades. It's whatever it is in your performance. Sometimes you look at it and you see like, all right, I shouldn't have bought this stock. Like, but why did you buy that stock? Like, what was your thought process in the moment? Was it because you were, trying to maybe chase a certain trade that you heard somebody else was doing really well with? Was it because you had heard from somebody that these companies are, this company's doing so well? Like, what triggered you into making that poor decision and then finding a solution of like, well, how am I going to make sure that I don't put myself in that position again? And I think that's it's tough, and I think that's where it takes a lot of constant self-reflection to discover what those things are. But you got to take the time to step back and say, all right, what's going on here?
Interesting. Well, I've got two more questions for you before we even get into the main topics of going through best and worst and all that stuff. And by the way, too, for everybody that's here that's watching live, first of all, thank you for being here. Secondly, type your questions into the chat. Like I'm looking at the chat as we go. We'll answer questions like as we go, and we'll have a separate open Q&A at the end for everybody. I already spoke to Bobby and Steve, and they're good to go until midnight. So we'll be sitting here like ordering takeout or whatever.
We'll be ringing in the new year over here.
That's it. How many hours is that? 48 hour.
Something like that.
48-hour live stream.
I might need a bathroom break for going
out. We'll stay until New Year's.
Yeah.
That's it. All right. Yeah. So, so one of the questions that I had for you is, what do you think about gut feel? Right, like that might be like a little like off the wall kind of question, but I'm just curious, based on what you guys have said. Well, what do you think about gut feel in relation to taking a trade, managing a trade? How does it impact you? Do you think that that's something that like it's just indigestion? Do you think that that's your experience speaking to you? Do you rely on it? Well, like any feelings at all on gut feel?
Personally, I think where you are in your trading kind of career is definitely super important. I've only been trading 4.5 years, so I feel like I'm just starting to get where when I do have those gut feels, I kind of take a step back and then I say, all right, let me just really do some research before I act on like what feels right. But where earlier on in my career, like, I mean, my gut didn't really mean anything. There was nothing really behind it. It was just, it could be something completely out of what I was trying to do that was triggering me to say, this looks good. So I think in the beginning of your career, it's important to feel those gut feels and then like take a step back and say like, all right, let me just not act on that. Let me say, all right, I see what my gut's telling me, but now let me do like a double, triple check before I make the decision and go forward with what I'm feeling. Where I think as you start to get further and further along your career, you can trust the gut a little bit more. But it's also really important to think about where you are mentally. Are you maybe have outside stressors going on in your life? Could that be impacting it? Have you been having a really great year? And now you think you're invincible and now you think I could buy and sell anything and make money. Is that affecting it? Or vice versa? Are you having a really poor year and now your gut feel is telling you don't buy something because now you're doubting yourself? So I think it's further along in your career, it's really important to kind of have that ability to understand yourself and understand like the state of mind that you're in before you just go to trusting your gut. And if everything's in line and everything checks out, and then maybe you can go with your gut. But I think at the end, personally, I accept like, okay, my gut's telling me this, but I still want to take a step back and say, let me just double check and do the work, because all the information's right there in front of you. There's no need to go into that blindly, any trade.
Does the gut feel refer to position sizing or to taking a position, or both? Could
be however you decide to define it, I suppose. Yeah, like I'll give my 2 cents. So like for me, when I think of gut feel, I'm thinking, well, when I'm observing a trade, right? Like, so part of my process is like I'm building a universe list of stocks, and I'm running through that universe list every day to see, am I seeing anything that's setting up? And the ones that catch my eye, where I'm just like, oh, like this one's a gimme, like that's gut feel. Or this one, it's okay, I see a couple of flaws, like that part of it is gut feel. I'm not trading based off of solely that, but the ones that look like, wow, like that looks awesome, then that's the first thing to say that, okay, I'm going to do more work on this, and then I'll go through and verify everything. So gut feel for me, in the screening process and the analysis process. Like it's that initial part, and then there's still that digging in. Later on, part of the gut feel in the management process has to do with sometimes I'll like today. Gut feel played a part when I started to see one of the trades that actually both of the trades that I was in. I was in two relatively thinly traded names, DFH and MLI, Dream Finders Homes, and MLI is Muller Industries. Both intended to be short-term trades. Didn't really like the action to hold. Like on the weekly, it looks fine. On the with my water bottle on the daily, on the 30-minute, it started to roll over, and so like I'm selling like right here, like like I don't want to hold this into the new year, right? And worry about that. And so it was basically scratched it, and the other one, BFH. Similar, right? Well, like so, where did I buy this? Bought it out of this little consolidation here, and get these like a million annotations. Yeah, to me it makes sense. To most people, it looks messy. So like I saw this, it basically got to about a 1R trade, so make 1 times my risk. Bounced back, rallied, and it's just like, yeah, you know what, like, and so I'm cutting it in here versus holding it. And for me, that part of it was more of a gut feel. So there's a gut feel for trade management, and there's but it's not completely like everything's just on a whim. Like there's a plan, but when I have a gut feeling, like I want to be able to, and I make a habit of trusting myself.
I think what you just showed, I would rather gut feel taking a profit than gut feel getting into a position.
100% agree.
So like you kind of said it as well, really pretty precisely. When I have a gut feel on a stock, I'll put it on a watch list. And I have a couple stocks on my watch list for years that I gut feel still think are going to be huge winners, but the market hasn't realized it yet. And where I think for me, if I'm going to really say there's a gut feel for me, it's it's like pattern recognition, looking at a stock that has all the can slim attributes that I think refer back to other can slim stocks in the past. I'll give you a really good example. Recently, Dutch Bros came out, and this I made money off it. It was actually one of my better successes last year. And to me, the reason why I was drawn to the stock is gut feel. Truthfully, I mean, they had the numbers, so everything aligned, but there was something telling me that this stock is going to be a winner. I watched a few YouTube videos. It just had all the markings of a can slim stock. They have this great service. They do things a little differently. The other thing was, for this environment, they don't have like a Starbucks where you sit in the location. It's all drive through. So to me, I'm like, this makes a lot of sense that this could be, one of those next big, I hate to quote Kramer, regional to national type of growth stories. And I mean, that to me is a gut feel, but the gut feel was within the parameters of all the system. Like I said, I do gut feel some profit taking, but once a stock hits a loss, the gut feel's gone.
It's funny because talking about stocks, one of my biggest failures, it was not buying a stock, and my gut feel about 6 months prior, just like you said, when you're kind of like doing that. So Zoom was the stock that I'm talking about, and it was I think it was June or July of 2019, and I was just doing my screening, and I just stopped instantly because I was like, I saw the earnings, sales, and stuff, and I was like, whoa, something's going on right here. And I started just digging into the company and doing research. And yeah, you could ask Steve, I was hounding him for like days. I'm like, something's up with this company. Something's
Mike,
up
if
with
he
this
was at the
company.
meetup, if he was at your meetup, you would have disinvited him. He was so annoying.
But
He wouldn't shut up about it. It was just like,
Oh,
all right,
man.
all right.
And
So you're
but the
talking about
reason-
Zoom back here? In
Yeah, it was
July
actually it was
2020?
like no, it was like no, sorry, 2019.
2019.
Like by
Wow.
the IPO. Because it had the sale, it had all the characteristics that we were looking for. And like I said, I just kept kind of banging the drum. The reason that I had so much conviction and actually even did the research is just like you said. It was like, you know, I mean, how many stocks do we all look through every single weekend? And you know, you're screening. And like you said, sometimes there's something in your gut that goes, whoa, stop. And that's exactly what happened. Someone was like, oh, stop. Let me look at this company. And I just started digging in. And then I gained the conviction because my gut gave me that instinct to say, well, you really got to pause for a second. Something's worth paying attention to. And the whole failure aspect of that is as I banged the drum on that for month after month after month after month. And then obviously the coronavirus correction occurs. This completely was bucking the trend before the market even turned around. And I was afraid to buy it and didn't buy it. And I missed the big run up. So that's why it's my biggest failure. But
Interesting. All right. So we actually, this is a pretty good question that came in from Tortoise King. Switch gears. What should you do if you learn the basics of canceling but lack trading experience? Trades take a while and I've had a few successful ones, but I want to practice. Is there any resources I could use?
so I'm just trying to digest that a little more.
So what should you do if you learn the basics of canceling but lack trading experience?
Well, you can do certain things, but I hate to say it. This is funny. When Bobby first started trading, he was, why don't you tell what happened? The difference between following stocks when you first started and then actually having your first stock.
In terms of like watch list versus making a purchase?
Yes. How different was it?
Oh, so different. It's like you watch a stock and you're like, oh, this stock's good. This stock's good. I'll sit there and talk to Steve. Like, what do you think of this? What do you think of this? But then when you actually have to hit that buy button for the first time, it's like, you get that nervous feeling because you're just not used to it. Is that where the direction you're kind of going down?
Yeah. Like you can do things, but experience to me is the ultimate arbiter. Like I'll give you an example. I'm a billionaire with all my trades I made outside of trading.
Yeah,
but I'm not a billionaire.
Well,
normally, it having your own skin in the game it just changes everything about how you view trading. You can read, you can, just observe markets. I mean, I think one of the great things you could do is just study the first 40 or 50 pages. I can't remember how many it is, and how to make money. 100 and how to make money in stocks. Look at as many charts as you can. Go back and look at. I'll tell you what. This is probably the best thing to do. Look at history. Completely study history because things they're not identical, but there's a lot of history. I'll give you. This is a really good tidbit. This is probably bad omen because I'm talking about this at the end of the year. How many years has the market been up double digits in a row? Usually, I believe, if I'm not mistaken, I don't believe it's ever been up 4 years in a row, double digits. I believe it's had successive years of 3 in a row, but not 4. So that's probably a bad omen going forward. So little things like, so they don't always, maybe this is the first time in history it happens. I could be completely wrong, but just looking at how, like, just going over as many charts as you can, seeing look at, like Bobby just showed you, Zoom, like Fleet Core, look at the charts of prior successes and what were the attributes of them. That's, as many charts as you can look at and understanding that company and looking at it in retrospect is some of the greatest things you can do. Like, think about, we talk about this all the time and I can't hammer it home enough. Looking at the stocks that change the way we work, live, and play, really look at those stocks and understand them, because that's what we're looking for in cancel. We're not looking for it would be great to look at a bunch of 25% winners, but you'd have to, the amount that you'd have to do that, getting a couple of 100 and 200% winners begins to make your life a little bit easier. So that's probably what I would, that's just my own recommendation.
The one thing that I would add, oh, sorry, go ahead, Mike.
No, go ahead, please.
And Steve hit on this before talking about experience, and unfortunately a lot of it does come into your experience. And I saw the guy Nick mentioning paper trading, and you do sometimes having that skin in the game. It's different when it's real money versus fake money. It's like you go to work every day and earn that. It feels a little bit different. You get a little more emotional. The way I think that you can kind of still get the experience without having as much risk is just simply start with a small portfolio, start with smaller position sizes, and make it something that you're not so concerned about the money. And that's kind of how I started. Like I went in there going, if I lose all this money, I lose all this money. I don't want to, but it's not going to affect my life. So when you start off smaller, it's a lot easier to focus on gaining experience, doing the strategy and the system properly, versus worrying so much about making money or losing money. So that'd be the one suggestion I'd have, is just, start small.
Because here's the one part where you could use like a system, like a arcade, but it will never help you. Look at me and Bobby go back all the time. Look at February of 2020. It didn't matter how your stock was performing because that was irrelevant. You know what I mean? You had and what I mean fundamentally, you had to look at the charts at that time because that was the differentiator, and you had to look at it's crazy. You had to look at the breadth. All of a sudden, do you remember? I'm sure you remember that period, Mike. All of a sudden, stocks around February 10th stopped making new highs. They were like the breadth started getting narrower and narrower and narrower, and there were only a couple of really good performers. And there was just something like I could tell you exactly what was going on. My portfolio wasn't getting killed, but all of a sudden it was like you had a car that was driving fast and it was doing well. And all of a sudden it just, the gas was taking off and you just started gliding, and you weren't losing money. You weren't making money. And so maybe that's a bad comparison, but all of a sudden the market just started to churn, and it started to slowly, actually there within a couple of weeks, it rolled over, and it rolled over quick. And you could look at a chart, but it's not going to tell you the severity of exactly what's going on. Vice versa. In March 7th, probably April 7th of 2020, I'll remember that day as long as I live. It was one of the most boring days of all time, but yet it was a follow-through day. And I was like, Bill O'Neill wants us to buy a stock today. And then that Monday, the market exploded. It was up. Do you remember? You guys remember that? It was up a ton. So there's certain context that you can't get from looking at charts. You have to get experience. But the one thing that the charts do that's excellent is give you pattern recognition. And by the way, I have one other suggestion. Mm-hmm. I would go back to the start of our podcast and Mike's podcast and watch every single episode. I'm just kidding.
I think that's great advice. The progression. You guys covered it. I don't have anything else to add. That's brilliant. Like that. That's exactly what you would do to start to get your feet wet, to start to gain experience. It's just you could read a book about exercise, right? But until you actually go and you do it, you're not going to gain any kind of muscle or strength. And that kind of brings me to the other question too. Tell me about how you came up with disciplined mind trading, because you can't really see Bobby, but his biceps are like the size of your head. You could easily be Jack Trades as your name.
I'm going to take this one, Bobby. So we paid marketing firms, and we did a lot of research, and we reached out on the internet. No, absolutely not. Bobby, take the rest of it. It's so, Mike, you're going to be so disappointed. I hate to say it. This is the most disappointing thing of the whole podcast.
Yeah. Well, COVID is really what kind of started it. So like we had mentioned in the beginning, Steve was kind of helping mentor me. We were at Texas Roadhouse pretty much every Wednesday. It was just steaks and stocks every Wednesday. And COVID hit, and it was just, restaurants were closed, and there was just no way of us really kind of sitting down and doing this. So we decided we were going to do Zoom calls. And then a couple friends kind of heard, oh, I don't have to sit down and have a meal with you guys. I could actually just, throw my computer on. Okay, now I'll hang out. Now I'll listen to what you guys got to say.
Yeah, that was pathetic. Nobody wanted to come. Nobody
wanted to come to Roadhouse. The minute it was Zoom, they're like, if I don't have to be in your presence, I'll attend.
Yeah. Well, no, they're all too cheap. They're all too cheap to take the cheap meal at Texas Roadhouse.
But so what ended up happening was you're doing these Zoom calls, and a couple people came on, and they were kind of not really. They were trying to learn the strategy. So it started going off in a lot of directions, and we finally were like, look, we can't sit on here for 4 hours. We're going to record it, and then we'll send it to you guys. And then when we said that, Steve's like, you know what we should do? We should put it on YouTube, and we'll use it as like a journal, so that if we want to see kind of how we felt about the market and what was going on, or certain stocks at a certain time, we could just go to our YouTube and just kind of look at it. And then I just kind of like, I had told Steve this actually recently. Even as a kid, I just always thought like video editing and like stuff like that was pretty interesting. And I was like, all right, let me try to have some fun with it. Let me, try to make some branding and things like that. The name itself, though. So like Steve mentioned, we're big fans of Jocko and the Jocko podcast. And a while back, I had created just my trading email. I wanted it to just be like all my trading stuff. So it was very, no spam, no nothing. So I just made like disciplined investing Gmail. And I was just like, oh, that's cool. I'm trying to be disciplined. That'll work. And then when we were thinking about the podcast, we were like, discipline investing, discipline. And we're like, Steve goes, no, disciplined mind. And at the time we started off, it was investing. And then slowly realized, we're not really investors. We're more of traders. It's a little misleading. So then that's kind of how it turned into disciplined mind trading. And it
literally took
it just evolved, really.
Like within 15 seconds, you'd say? Maybe 20 seconds?
If that.
Yeah.
It was like, my email is disciplined mind investing. Want to just use that? No, disciplined investing. Want to just use that? Maybe disciplined mind investing. Hey, all right, that sounds good.
That was also part of our going to Texas Roadhouse. We would talk about like different podcasts, like on Rogan,
mindset stuff,
Rogan or Goggins or Lex Fridman and all those type of people. We would discuss that as well. So
yeah,
very cool. Got a good question here from Alex. Alex was saying, how did you become more disciplined to follow your trading rules? How did you become more disciplined? Because, or were you always disciplined in following your rules?
I admit it. I started out as the most disciplined CAN-SLIM trader of all time. So this is pre-computers of affordable computers. I would get out a green ledger pad and I'd write down, go have on the weekend IBD, and I'd write down every stock that was like over a 90 relative strength earnings per share. This is even before composite rating. And then as I ventured out and became an unsuccessful trader, failure moved me to become more disciplined. And then Bobby got lucky enough to meet me, and I just hammered it in on him. And
no, I mean, in terms of how I went down the path, it was just hammered into me. And I will say one thing too, reading Market Wizards definitely kind of opened my eyes to realize, like, one of the, like, all these people in this book have vastly different strategies. Yet the one thing that was constantly repeated, kind of interview after interview after interview, was having that discipline. Alexander, if you're asking like what's a thing you could do to become more disciplined, my biggest thing is writing down your rules, checklists, and just having everything like laid out in front of you. Having a checklist, having these are my rules, this is what I'm going to follow, and something to kind of always fall back on, to just physically see in front of you. I think that helps me a lot.
And post-trade analysis.
Yes.
That to me is unbelievably key. Post-trade analysis, because particularly there are two times I think it's unbelievably helpful. Number one, when you lose or you don't execute your trade properly. And the second part, and this gets to be probably the most frustrating thing as an investor, and it goes back to what you're saying, Michael, on that fleet core. It's not fleet core, was it? Fleet core?
Yeah, Fleet core.
Yeah. that Fleetcore trade, you only got 25% of a stock that had a lot more meat on the bone.
Right.
And like sometimes, like to me, like why didn't I get more of that trade? And that's something I think that's super important as well, because every person has a story of where they were in a super winner. Like, why did you ignore what the market was telling you? Just really you're gonna make mistakes. It's just trying to minimize those mistakes. And the more that you do this, the more you realize how important that discipline is, and just to have systems that try to keep you in place from avoiding, just trying to do things on your own. That's at least how I feel about it.
Right. Yeah. Like thinking about it back then, part of the reason why I deferred to some of those other people was because I didn't have a plan that I had a ton of conviction in. And there's a point where you think that, or like, yeah, well, when I was trying to figure this stuff out, where I'm questioning, like, am I doing this right? Or is there something else that's wrong here? So, like, kind of so trusting the system, but not trusting myself to implement the system. If that
100%. Yeah. That's one of the biggest problems. That's why people veer. You know what I mean? Like we always think that what's it? FOMO is the big word now. Like
Yep.
fear of missing out. Everyone thinks that everyone else is smarter than them. Everyone thinks that whatever they're doing might not be the best. But sometimes, like when you find a system like Cancel, I can't. Like I mean, I could just keep hammering this home. I could go for the next, between now and New Year's, just keep hammering this home. Cancel provides you all the tools that you need. If your Aunt Sally or Kramer or Warren Buffett tells you to do something, you can't listen to them. You got to listen to the system. And I'm going to tie what Alexander sang and Tortoise King said. The hardest part is between the time that you start and you get that conviction of exactly doing the system right and properly and having that discipline. And in between there, it like I said, I admit this freely, and this is one of the biggest parts of my journey of how I've gotten to be a much better trader. I deviated from it. It was a huge mistake. I've left so much money on the table. It's criminal. But by understanding my mistakes and being completely open-minded and blaming only one person, which is me, and being accountable, that's going to help you grow your discipline, because you know that every time you make a trade, you have to be disciplined. You're putting your money out there. Like, people go to casinos and they have systems. Like but you're not betting, $20 or $50 or $100. You're betting thousands of dollars. So you better have a system that's aligned and that you feel confident in. Otherwise, what are you doing? It begins to be crazy. So and listen, we all hear stories of our friends and families who, I'm going to buy this stock with no research, and somehow that person becomes wealthy, or vice versa. You hear about someone buying a stock and they get killed. Yeah, it's because they're doing the wrong things. And what we want to do is, maximize our successes and minimize our losses. And the only way that I believe that it's done is through discipline. So, anything you could do to stretch your mind, do discipline in any other part of your life too, I think is huge. I mean, Bobby does triathlons, or used to do triathlons.
Haven't this year.
He goes. Michael noticed he goes to the gym. Bobby's a very disciplined guy. He does a lot of our editing, or all our editing, which will be a lot of our editing soon. It's just the discipline that you have in everywhere else in your life flows over to trading. I'm sure, Mike, has that happened to you as well?
Yeah, absolutely. Like the more discipline, or it could happen the other way too. Like if where you and Bobby mentioned this earlier. Like let's say you're having a rough day, right? And you're low energy, and then you see a chart. How you perceive that chart, or that trade, is going to be different than if you approach it and you're energetic, and you're alert and you're aware. Like it's it could do it from an energy perspective, from people's habits. Like if you're undisciplined in one area, it could bleed into other areas. And if you start to improve in an area, like let's say that you start to start a new habit, right? Like you're going to start with eating an apple, right? An apple a day, right? Like, and why not start there, right? Like, oh, where else would you start? So let's say that's your new habit. Well, if you starting to become disciplined with this, maybe you start to become disciplined with something else, and it starts to be a snowball effect. But if you start to slack off in one thing, like there's been so many times where like I could remember that if my morning routine would start to get upset, that it would tend to affect the rest of the day. I've gotten a lot better at both being disciplined in the morning and catching myself on the days that I don't, to not slip. But yeah, like one thing can certainly affect everything else.
Agreed.
100% agree. I think when I'm normally trading my best, meditating, I'm stretching, working out. I'm obviously part of the discipline, doing my routine religiously, like, and not just like mulling over, like really doing my routine. And like, I'm just, everything I feel like in my life is just like, I'm checking all the boxes, you know what I mean? And look, some days it's like, I'm checking the box, but I'm just barely getting it done. And some days I'm like flying through it perfectly, but same thing I've noticed. The more I have all aspects of my life dialed in, that just completely bleeds into trading, and I just feel like I'm much more in line with trading. That one of my biggest failures. I don't know if you want me to bring it up now or kind of hold off. It's up to you.
Yeah, like you could mention it now, and we'll dig deeper later.
But so I went to Oklahoma I'm an air traffic controller. So I went to Oklahoma for air traffic control training, and it's a pass-fail type of thing with like 50% pass rate. And while I was there, I said, I'm not going to trade because I have to commit to what's going to be my career. When I came back, I was riding this high of I passed, I'm an air traffic controller now, and I know where I'm going to be living and stuff. And I was barely working out. Like I was kind of just getting it done. I was hanging out with all my friends. I was just like barely doing my stock work. I was just, everything in my life was just like, it was more like I was just enjoying life, and I wasn't like getting what I need to get done. And I had a 40% drawdown that year, all because I was just trading horribly because I wasn't doing the work and I didn't have the discipline. And it kind of just, it was through all aspects of my life, really, that kind of caused that to just fall downhill.
Yeah. So there again, like other parts of life affecting trading.
Yep.
The more awareness that we have about all this stuff, man. Yeah, disciplined mind, disciplined trading, disciplined everything.
Yeah. Discipline is one of the most important words, especially when if you want to become a great trader. I think it's probably the most important quality and that's why we put it in our title. But we kind of, like we said before, we kind of like those people who, William J. O'Neill. I mean, he's about as disciplined as anyone as you could possibly find. You know what I mean? When you like Dan Zanger, I guarantee I've only heard of him on the periphery. Guaranteed he's disciplined. Look, Mark Minervini, you see him all the time on Twitter. Super disciplined guy. I don't think there's anyone who trades who's great. And Bobby said it before. All the people in Market Wizards, name, all the above. I'll use a name that we love, Tom Basso.
Yeah,
like people with the highest.
Trinity.
Yeah, these are people with the highest levels of discipline. It's Tom Brady, unbelievably high level of discipline. Bill Belichick. I mean, even Warren Buffett.
And that's coming from a Jet fan that just said that.
Yeah. Oh, I love Tom. I love Bill Belichick. His work ethic and everything else about him. I hate his guts on Sundays. So sorry, all you Patriot. Well, actually, I'm not sorry, all you Patriot fans. You guys have gotten the best of me. So yeah.
Oh man, here's another really good question from Alex. So Alex was saying, what did you do to not take trading losses so personally?
It's tough. It's really tough to do.
That's a great question.
It is a great question. Experience is definitely one, but I think one of the things that I finally like started to tell myself to do was, as long as I I took a loss within my pre-planned risk. So whether that was 2%, 5%, 7%, 8%, whatever my loss was planned out when I made that trade, as long as I did not exceed that loss, to me, I said, all right, that's a win. I followed my strategy. This is kind of calculated into my trading. This is going to happen. If I took that loss and I didn't let it slip any further, I said, all right, I didn't allow myself to get emotional. I executed. I did the right thing. I followed my plan, and I looked at it like, all right, that was a good thing. It's very, very, very hard, but just saying, like, I did what I said I was going to do. And I think that helped me a lot.
I think that's a great response. For me, it was, it's funny that Alex brings this up because I used to take it personally when I deviated from Can Slim. I did, but one of the great, I forgot who I heard this on. It was on Michael Kovelt's podcast. I don't remember the guest, but the guy said, you become a great trader when you go into a position and on the fifth time, you're able to make that. After 4 losses, you go into that 5th time and you make money in it. So it's basically like you get kicked out of a trade, and then all of a sudden that trade becomes an awesome trade. That happened to Bobby last year with AMD.
Yeah,
it was his favorite stock. So
fourth or fifth buy.
Yeah, can I tell the story?
Yeah, go ahead.
So last year, Bobby, like how he was talking about Zoom, this guy couldn't shut up about AMD. Like I didn't want to, I swear to God, Bobby's really annoying. He doesn't seem like, I seem like the annoying one on this podcast. He's the one who's annoying.
But, if anybody wants to hear the truth, they can see our show.
So he would just talk about AMD. And for me, I paid attention, but not, I couldn't not pay attention. So all of a sudden AMD had this great chart. I was like, this is perfect. And it was the first time I was going into AMD. So I bought the stock and I called him up and I'm like, Bobby, are you going to buy this stock? And what was your answer?
I was like, I don't even know if I said anything. It was just more of like noises. So like, and then I just remember you just like said something like, I don't even remember if you.
I'll tell you exactly what I said. I go, this looks perfect. Why wouldn't you be going with this? You've been the one who told me about this. This is the reason. You're the reason why I'm buying. I swear to God, if he didn't hammer me, I wouldn't have been looking at AMD. And it was all he was completely responsible for my like 40% trade last year in AMD. And I'm like, dude, you're the one who knows everything about this company. Why wouldn't you buy it?
Yeah. And then I said, I think the minute we hung up the phone, I think I was at work. I forget where I was, but I pulled my phone out and I'm like, all right, let me take a look at this. And I just started flipping through and I'm like, what the hell am I doing? I'm like, Steve's right. I'm like, I keep saying it. I'm like, I think I took 3 losses before. It was like, I think a 7%, a 6%, and like an 8% loss. And I actually remember, I don't know if it was a podcast or something. It might have been the Covell one. Somebody saying like, sometimes your trade's going to fail, your trade's going to fail, your trade's going to fail. But if it works and it looks perfect, you still got to be willing to take the risk. And then I'm like, I did. And I was just glad I did. So thank you, Steve, for giving me a little kick.
Alexander, it's just experience. It's hard. This is, again, one of those things that you could look at a chart. You could do one of those arcades dealing with charts. Until you take, yeah, exactly. Until you actually do it, it just, your mind is a weird thing. It's different when you have skin in the game versus just doing some sort of game. Like I said, I'm a paper trader billionaire. I'm the greatest trader of all time. I'm not as good. I got to start learning how to do it with my own money. But it's really it's super super hard. Yeah, but it's just that process of and dealing through the grind. It's hard as far as how I look at it.
One of the things that helped me was when I started to shift towards looking at blocks of trades, not like looking at this one trade needing to be a win or a loss, this one trade, but like looking at like 10 trades, a block of 10, a block of 20, and then also looking at the win rate over a year, over a quarter. And when you start to have that data, you start to like my batting average is 45%, right? So that means that I'm losing more often than I'm winning. But on average, I'm making close to twice my risk on a winning trade, and on a losing trade, I'm losing about 0.07.
Yep.
right? So that's a winning system. So, but most of the time it's going to be a loser. So like random trade, like, oh, this one turns out to be a loser. Okay, on to the next one. And we also did a study too. Stu, the one of the guys that I coach with, brilliant. He gave this talk about how to figure out potential losing streak given your batting average. And so with a batting average of 45%, and Stu's about at that same batting average as well, over 100 trades, there's going to be a losing streak of about 8 in there. Right? Now, if you are unprepared for something like that and you're just getting loser after loser after loser, it's just like, oh man, like, is something wrong with me? If you're brand new to the system, like, this is a piece of crap, just throw it out the window. Like, it's a matter of like understanding the system, understanding your own performance, and looking at it at that aggregate level. Also, I think rolled up into there has to be your journaling and your post analysis, because how else are you going to get those kind of stats?
Yeah.
So setting expectations, journaling, tracking, post analysis, all those core skills, and stepping back and looking at the big picture.
Can I ask you a question? What did you
yeah.
think your batting average was before you actually saw your batting average?
Oh man, so I've been tracking my batting average for years now. So like I've known that it's kind of been around that level. It tends to hover between, so like 45 is pretty much like stable. Sometimes it'll ramp up to about like 60-70%. Like in the period between like the first week of October to mid-November, like I could do no wrong.
Yep.
And then after that, like okay, like things started to get choppy. Paul like stepped out. I was in cash for a while. But yeah, like you'll have periods too where you could have like an 8, 9, 10 trade winning streak. Streaks are a thing. But to go back, well, when did I start to figure that out? Well, when I started journaling. When I started journaling.
But did you think you were like? Did you think you were like 70% winning? Or
no, not even close to. So like
I
when
thought that's what I thought I was. I swear to God, I thought it was like 60. I might even be lower than you. I think I'm about like a 40% win rate.
Mhm.
And I swear to you, I thought I was probably like a 60 or 70% win rate. And I was
That's cool. That's because you're very cocky.
No, I'll be the first to admit it. I'm a very arrogant guy. I really am. But you know, I'm Italian. I have a hard head, man. You know, I think I'm never wrong. So I thought it was probably closer to 100%, but I knew I had some losses in there.
I'm only half Italian, so I'm a little less cocky.
There you go.
But it was when I started journaling, and so that goes back about 12 years when I first started or first found the New York City IBD meetup. That's when I finally started to get serious about trading, and those guys were saying like, look, like you got to journal your stuff, and here's how. And so I started to look at that and realize like, wow, like, okay, yeah, I kind of am all over the place here, and then started to find some consistency. So yeah, I never really thought that I was like 80-90%. Like I was pretty aware of how much the market was kicking me in the face.
Right. One of the other things that hopefully is helpful to Alexander, and Bill O'Neill says this in his book, the market doesn't care about us. You know what I mean? And like, if you have that idea, that thought process, that it's not about you, it's about what's going on in the market, it begins to take off some of the sting of losing.
Mm-hmm.
Here's a really great question for Matt too. So Matt is saying, what would you say helped you move from looking at the money part of the trade to trading the trade?
For me, this one was like one of the things I did super early on. I don't even know where I figured this out from, but on laptop, phone, everything that I look at my stocks, immediately losing the profit loss dollar amount and switching everything to percent. Just move everything to percent, and it's like now all I'm thinking about is what my plan was: gains, losses, executing at the right percentages, executing on the charts, and just completely getting rid of, daily and overall year to date, all of that profit loss and the dollar amount, I completely removed it. And it kind of helped me just kind of forget about it. And the only time I really think about that is when I'm doing post analysis type stuff.
For me, we really like John Wooden and a lot of his philosophies. Me particularly, I love the guy, and he never talks about winning or losing. He talks about just executing, and that to me is just looking at the chart, looking at, like, I'll give you an example. I talked about Pfizer earlier. One of the reasons why I sold it, it broke the 10-day moving average. I said at some point it was like pretty highly extended above it, and I was like, once it breaks the 10-day, I don't feel confident enough that based on what's going on with Omicron being a lot less severe, that people are going to be buying this hand over fist thinking that this is going to be a super winner. So where is it that I can minimize my risk, but yet, try to take that longer term approach that maybe it'll bounce off of something, and just, I think that's a hard, I have to say, that's another, everything about investing is hard. You know what I mean? I don't think there's anything easy. I think there's one thing that's easy. It's actually buying a stock. I truly think that's easy, and everything else is hard from there. But for some people, that's actually gets to be hard because they're too nervous to do it. But this is all about experience. And it's going back to Tortoise King's question about, how do you get experience? The only way to get experience is experience. Sometimes it sucks when you're starting, but you got to be patient and just wait for all these different scenarios to occur, and then you can build off of it.
One of the things that I think about is my relationship to money, and so that's changed over time, and I believe that it likely will continue to change and evolve in different ways over time. So when I first started out, like, money was very dear to me, and not to say that I don't care about it at all, because, like, of course, money's important, but back then, like, it was so dear to where if I'm in a trade and I started to see the trade moving up, like, I would be the guy that would want to take the gains quickly, and I wouldn't want to cut losses because, like, oh well, it'll go back up. Like, I don't want to lose, like that kind of mentality. Part of that was wanting the market to pay for the different things, right? Like, so the market is going to get me out of this job. The market is going to pay for a car. The market is going to pay for this, pay for that. Like, when I started to gain an awareness, right? And so, like, all that stuff is just happening in my subconscious, right? So I'm taking actions based on this, but I don't know that I'm taking actions based on this. When I started to have a level of awareness that these are what my money beliefs are, these are what my and how it's affecting me, that's when I was starting to, or I was able to start to compartmentalize how the like allowing the trades to perform how they're going to perform, and to not be as attached to the dollars in the account. I ran into that trouble again later on, and this is only going back about 3 years, right? So that first part was like over 10 years ago. Then fast forward to 3 years ago, that's when I finally had the discipline where the profitable for and consistent for many years, built up the war chest, and finally, like, had enough saved to, screw you to the man, and now doing this stuff full time. But the relationship with money there changed again, because now I went from having a stable job, money coming in, trading was great, but now the reliance on trading is different, right? Like, now it becomes more of like there's still like other legs on the table, right? But you take one away, and now all of a sudden the table's not as sturdy. So there was overcoming that hurdle too. So part of it is understanding the relationship with money. Um, I think that like personally, I find relying on trading as a sole source of income. Personally, I find that very challenging. There's like I have friends that have done it successfully for years. Um, hats off to them. I think that part of it is knowing yourself. So the all the meditation, all the beliefs exercises, all that stuff that we've talked about, like it's that kind of stuff that becomes super important. And then you know what your operating system is up here and how to work with it and how to evolve it.
Yeah, your perspective is great, just too, because like you said, I mean, you're in a different position than us, where this is a big source of your income. Steve and I are both have regular, just normal jobs, so it was interesting to hear from you, just kind of your perspective.
Yeah,
I know you're facing a different challenge than us,
Yeah, next Friday I get a paycheck. Yesterday I updated my 401k plan for next year, so there's definitely different levels to this. Yeah. I mean, I know a little bit about what you're talking about because I manage some of my family's money. And, it does get to be a little bit more complicated. Like, but if, to me, ultimately it comes down to this. Like I love sports. So you heard me talk about, I'm a Jet fan, and the Jets never execute. The Jets never stick to a plan. It's like, because they get behind all the time, they always have to, improvise. And to me, the more that you stick to a plan and you do, because you see it in the middle of a game, you know what I mean? Like the more you execute to the plan and the system that you're using, the better off you're going to be. This is where, you see a team that's running the ball great, and then all of a sudden they start passing. You're like, what are they doing? Why are they doing this? Or if they're blitzing all the time, then they stop blitzing and the other team starts scoring. You're like, what are they doing? It's just sticking to that plan that's consistently working to me. And I think that's a huge part of, just any system is just about building upon itself. And the more that you execute and the more that your confidence in your execution, I think money then begins to go out the window. Is it great, at night looking and seeing like you're up $5,000 or $6,000 or whatever it is? Yeah, it's awesome. But, it's all about if you can't consistently replicate what you're doing over and over again, that one trade is just luck. You know what I mean? The whole part about this is building a skill that you can consistently replicate over and over and over again. And you could perform in bear markets and you could perform in bull markets. That's ultimately what we're striving for. And when you do that, the level of confidence that you have across the board completely changes and really shifts your mind that you're doing the right thing. I mean, I don't know if that answers it, but
I think it answers it brilliantly.
It couldn't be brilliantly if it came out of my mouth.
Where's that Italian confidence?
Come on. I have confidence, but I also know who I am.
Oh my goodness.
Yeah.
Let's talk about biggest successes. What's the biggest success from 2021? Right. So we're going to talk about biggest successes, worst failures, lessons learned, and prep for 2022.
How many go, Steve? Or you?
Yeah.
Trade wise, I actually started off the year with so I don't do much swing trading. It's something that I probably started to incorporate over the past like year and a half, 2 years. And I decided to take a swing trade in plug.
In plug?
Early, yeah, PLUG.
All right. Yeah, well, let's have a look over here.
So, sorry if you guys hear my dog in the background.
Not Plig, but plug. So earlier in the year, so that's like somewhere in this move.
Yeah, so on the 6th of January is when I actually made my purchase. So,
oh wow, so that's down here.
Yeah, so
that's one hell of a move.
So this was like one of those I earlier on in my swing trading kind of thing, and I was watching the stock go on and run, and it was funny because actually one of my uncles who doesn't trade just brought this company up to me. And I looked at the chart and I was like, oh, it looks like it's in this like kind of downtrend. It's like pulling into the 21-day moving average. And then I was like, let me just kind of draw a trend line kind of across this like downtrend towards the 21, and just, you know, if it breaks that downtrend, I'll put a position on, and then I'll just kind of try to ride the trend up from there and just see how I can execute on like a swing trade like this. And so on the 6th, you could see that it kind of like broke that downtrend, bouncing off that 21-day moving average. And I put a position on it, and I mean, the thing just completely skyrocketed. The other reason why I find for me this being successful is I didn't get so hyped up and say like I'm, you know, as people say today, I'm riding this to the moon. I took a 27% profit right off the bat. I took about a third of the position off, and I said this was a swing trade. I was just trying to just kind of get a quick gain out of something and see if it kind of started perking up. So I was disciplined enough to at least lock in some gains. And then so that was on the 7th, which was the next day. So I quickly locked in some quick gains. And then basically from the 12th, 13th, and 14th, I sold a little bit.
30% gain in there.
Yeah, so I think it was 27 on the second sell on the 12th. It was like a 75% gain, I think. And then I just kind of kept trimming on the way up. And then I said with my final position, when I closed or got close to closing below the prior day's low is when I was going to take it off. So that was the 14th, actually. It kind of showed some weakness, and that was when I took my final position off, was on the 14th. So I was just proud of myself too, because it was like I had a plan. I kind of like perfectly executed it. It was one of my like real first successful swing trades that I've made to that extent. And I also just liked how I kind of kept to my rules and said, all right, I got a certain percentage gain. I got to lock some of it in and not get greedy.
Wow, well done.
My turn?
Well done. Yeah, go for it.
I'd say technically my best trade. I've had a couple of real good trades. The one I liked the most for me personally was BioNTech, BNTX.
BNTX.
Yes, the probably this is going to be politically people aren't going to like this politically. It's one of the vaccine makers.
Okay.
So I bought that on July 21st. So yeah, so that stock was breaking out of a base, and it just took off. I sold some at 25% actually, because it just ran up so quickly. And then I sold out, was it so that was what day was that? The 21st. And then I sold the rest of my position out on August 4th at 380. You know, I'll never sneeze at it. Yeah.
Run right there.
Yeah, it was so extended over everything else. I was just like, you know what? So on my plan, I only wanted to take this for a 20 to 25% trade. It just felt so strong. And, you know, I kind of, in the back of my mind, I was like, okay, this is a, was it 8-week rule from IBD. I was like, this is so strong. There's something going on here. And it wasn't even close to the 10-day moving average. It was so far extended. And at that point with that, on that 380, I was like, this is ridiculous. Let me take that. The reason why I like this is it was like technically a very sound trade. So like I've had other successes, and like we talked about Dutch Bros, a couple oil companies, Callon Petroleum, NVIDIA, like 5 times. But I think I just like this trade technically because it was just executing the system almost ideally. It was a proper buy point, proper sell point, and you know, it worked out really well for me. And it was just a quick gain in a very short period of time.
And let me ask you this, and Bobby, I'll ask you too after Steve. But well, what are the lessons that like some of these big, the most successful trades? Like, what are some of your takeaways from them? Like aside from the gains, of course, right? Like,
like this one, yeah, this one was just handling it perfectly and just trusting the system. That was it. Like just
trusting the system.
Yeah, like this was, to me, that's why I'm highlighting this. I had some trades where I made more money, and higher percentages, but this one was technically like sound. It was actually executing the cancel system the way it was supposed to be. You know, it was a proper base. I guess probably someone's going to nitpick and say you should have held it the whole 8 weeks. But to me, it got so far extended. I was just like, how many days is that? From the 21st to the 4th. I mean, that's 2 weeks, not even 2 weeks I was in this trade. You know what I mean? And like, I got over 100 points. I'm like, at a certain point, you got to take your profits.
Yeah, 11 bars, 15 days.
Yeah. So, that's really, just to me, it's always about going back to the system. Like I love to keep saying it. It's just replicating it over and over again. And I truly don't think, because I pretty much almost sold it at the top. You know what I mean? Like, could I have held it a little bit longer? Yeah, but I have zero. This is probably one of the only trades this year I have zero regrets on. That's probably the thing I learned about it.
Yeah, for me, I think it was like, it's just having a plan. Like, I mean, that thing took like a parabolic kind of run up. But I felt like I never got emotional because I just had a very simple, defined plan on what I was going to do. And every day I just took a look and I said, all right, I'm just going to kind of keep selling the strength. And then like in my plan, I like had an idea of exactly what I was going to do. So that's just, I think, the biggest thing. Because especially when you have something that explodes, it's so hard to keep the emotions out. It's just like you just that's what you want to see. So you just get so excited, and then sometimes the stock pulls back, and maybe you sell too quick, or you sell, you don't sell when you should have sold. And I think because I just had a plan, I just kind of stuck to it. That was my biggest lesson. It was just like, I felt internally so comfortable in the trade because I was just like, all right, I'm just going to do what it tells me to do. I'm just going to do what it tells me to do. I'm just following my plan and try not to get emotional. This is a stock that I could have easily started saying like, I don't know if I should sell it. It might just keep going. And I was like, if it keeps going, it keeps going. I'm just following my rules.
So this might sound like a weird question, but when are you developing your plan? Like, is your plan like evolving as you're going, and it's like, okay, like I have my set of rules and I'm allowing the market to try to tell me like, okay, like, and you're figuring out the sell decision in the moment? Or is it almost like kind of pre-planned where it's just like, okay, if the stock breaks such and such moving average, or if it hits a certain price target, like that kind of thing? Like
Bobby, is that for me or Bobby?
Both.
Okay.
Both. Bobby first.
So with me, this was actually the first full year where I completely defined all my sell rules on upside and the downside, swing trades, longer term trades, regular, just strict trend following position type of trades. So that's, I think, the core of my kind of planning is like, sorry if you guys keep hearing my dog.
No, I don't hear it at all.
Okay, good. So that's the core of my planning. But on a daily basis, that's where I'm kind of doing like the technical analysis, and I'm seeing like, all right, here are my laid out rules. Is there anything that I'm seeing in the chart that is a hint that maybe I should be selling earlier or something along those lines? So it's like I have my core foundational rules, and then after the market's closed on a daily basis, I'm assessing what the chart's telling me, assessing also big piece of what's going on in the overall market, and then determining what my kind of lines in the sand are on the upside and on the downside for the next day.
Interesting. And do you have these rules like written somewhere, or are they in your head, or what?
Yeah, I have like a Excel sheet, and I just kind of have tabs. So it's like I have my buy rules in the tab. I have for like a swing trade, I have my sell rules for a swing trade. I have my position, I call it, which is more of my kind of traditional canceling type of trade, buy and sell rules in two different tabs. And then like I call it my true market leader, something that I kind of want to do. Well, hopefully, if the stock does do the right thing, maybe a longer term hold for multiple months, buy and sell rules for that. And then I break that down in terms of like my first things like the red zone. That's where my loss rules are. and I have a list of all the different things that I kind of follow from there. Then it's like, I call it no man's land, that like 0 to 5%. Like, what am I going to do based on action around this area? And then kind of so on and so forth. So that was one of the things I kind of really fine-tuned this year, just kind of in terms of like my system and my thought process.
Steve?
Okay, so on this BioNTech trade for me, as I said, I had like a 20%, 25% sell rule, but because it was acting so strongly, I sold a quarter of my position at that point, and then I let it run. Once this stock exploded, and I mean, it clearly looks different on the chart that you have up versus when it was live. It was so far extended that it was just understanding like the gap between the 50-day moving average and the stock. I knew
at that point it was like 75% above the 50-day.
Yeah, that begins to be a danger zone. Now, I also knew this. This one was a little easier than other stocks. This is a vaccine maker. There was only so much of a market. By that point, we were in August. Basically, I believe, if I'm not mistaken, that took off when Delta started to populate. That's why I believe, I could be off on that, but I already knew that there were, like in New York, I think like 80% of the people were already vaccinated, adults. And I knew that there's only a limited amount of people to still be vaccinated. Yes, there are people around the world, but their earnings weren't. This is more of a, I'm sure BioNTech's going to develop some other drugs, but their earnings are going to decline by 12% next year on the MarketSmith that I'm looking at. And, what the hell's going to happen the year after that once the pandemic goes away? And I believe this ran up that they were going to be giving out the third shot, so that this vaccine was going to last, that will be out there longer. So you know what I mean? It's just a little, I don't want to say gutted, but it's just certainly understanding the valuation of the company based to other biotech companies. These are non-technical things that add up into my assessment. Understanding how, like, this is a $62 billion company. There aren't that many $62 billion biotech companies out there. Understanding the market and understanding technically, like, how much really more can this really go up? I mean, I'm sure it could have went up, but I was content and satisfied with the gain that I had at that point. That I didn't want to risk, pulling that, having it reverse on me, which it ended up doing, 1, 2, 3, 4, 5 days later.
Yeah, for sure. Like that's kind of a lot like, so that both of you guys made points that lead into both my biggest trading success, as well as my biggest trading failure for 2021. So, like the biggest success, like I was actually in Doge like early on. Let me see, did I pull up the right? Because there's multiple of these. Got the annotations on this one here. So Doge was, like, I got in back in February and basically ran it up for the whole move.
That's awesome.
Yeah, like that was kind of a insane. Like it's approaching it like my intent with it was to be long term, and every single crypto trade that I've done, like crypto has been far and away like where I've made my biggest gains this year and last year. But every time I've approached crypto from the perspective for it to be long term, so to hold for more than a year, I've been completely unsuccessful with holding for more than a year because like I just can't see like giving back 1,000% gain, right? Like even over here and like sitting through that sharp pullback like that was rough. But when we got over here and it's like making this move, like in the moment I'm like, oh wow, I'm gonna hold this until like hits $10. Let's say that plan quickly went out the window. Like when you're sitting through a 50% drawdown,
Right.
and seeing like an 800% or 1,000% gain turn into like 500, like that's still fantastic. But when you're up more than 1,000%, it's crazy. So I actually ended up selling on this rebound here on May 14th. And I remember that day because we were in Disney. So
my wife would love to hear that. She loves Disney.
yeah, like for personal successes, like that was actually like something that I had written down. Like I started keeping a daily journal, like personal journal, like whatever is inside my head, like trying to get from the day as much as I can. Like this like the Disney World was one of them. Yeah, so there was this trade like percentage gain like that. That's the largest percentage gain. I'll lump this into both the best and the biggest failure, right? So worst failure was this one here. Upstart. What do they do? Right? So yeah, we all know that. So
yeah.
So what happened to me with this, right? And part of the reason why, Bobby, I mentioned that it ties into some of what you were saying, that I saw this as a true market leader.
Mm-hmm.
So, or potential true market leader. And so when I bought this, like I bought this breakout right here. Right. And I rode that up, and I like to scale out of my positions. So I'll take a little bit off when I have 1 times my risk, a little bit more at 2 times my risk, and then continue to scale out that way. So I have my scale outs, and I'm holding onto a piece, right? And then it comes back in and kisses the 21 and bounces. So I'm like starting to get a little bit cute with this, because I'm thinking this is a true market leader. So I add a little bit back right in there, right? And then it comes back around, and then it pops out over here, and I add a little bit more on that, right? So I have 2 more ads. I have my original position, like so full position here, and a small ad over in this neighborhood, a small ad over here, and then we're coming to earnings. And I decide that I'm going to hold through earnings, because true market leader, right? Like so, and this is the reason why I like true market leader, not true market leader, as we label anything, like we're creating a bias around that thing, right? So I'm entering this, like I'm treating it differently than I would with any other trade. If I'm looking at this and it's just bars on a screen, right? Like I'm not behaving in this way, but because I've labeled it in this way, I'm giving it every possible chance to fail. And then what happens? It gaps down 20%, and I end up selling everything down here. Now, part of the reason why this is both the worst trade of 2021, but also I put it in the success category, is because with the ads and with the position sizing that I did on a 20% gap down, I only lost 1% of capital. Actually, a little bit less than 1% of capital on this. So, like I feel as though like that gap down and that loss like gave me even more conviction in how I position size and how I manage trades from that perspective. But it also gave me a really good lesson about not labeling things, which is something that at this stage I should know better. But well, the market will give you a lesson until you really learn it.
It's almost like sometimes, because I know I've done it where I feel like I'm labeling something and I'm doing the right thing. Like I'm labeling this and this, oh, this is a true market leader. It has to be handled differently. So it's like you think you're doing the right thing, and then sometimes it works and sometimes though. I mean, I know I've definitely been in the same position. I'm sure I know Steve has. It's like one of those things where it's tough. It's tough knowing when to treat something differently and when not to.
Yes, Steve. Well, what's your thoughts on that before we get into your
Labeling
guys'
stuff?
bellies? Yeah.
I would only label something a true market leader if it were like had all the characteristics and you knew it was truly changing the way you work, live, and play. I agree with the biases, but I think it really has to prove itself before it gets a title from me. I don't know. Maybe it's just me being a little critical, but
Prove itself in what way?
it's just the business model. Like I'll give you an example. Going back to my Apple in 2009.
Okay. Should I pull it up? Or?
No, you don't have to. I mean, it'll just only bring me more pain. I knew Apple had the best product. You know what I mean? No one else was out there. And so it was clear as day to me. You know, they had the only phone manufacturer with a browser that worked. Then a year later, they came out with the App Store and all the other stuff started to align. And, you know, things like that, like Tesla, where they have a true lead over someone else. Like it's really hard for me to give out that title of what a true market leader is. It's got to, you know, it's interesting in analyzing what true market leaders are. You get some, like I'll give an example, BioNTech. That's why I was nervous. I never thought BioNTech was a true market leader, even though it had true market leading performance. I knew it was just, you know, a business that the market or whatever was going on in their industry at that time, they had a hurricane at their back. But at some point, the hurricane winds were going to turn around in their face. Whereas for me, one of the things, I'll just tell you this, Mike, because we don't really know each other that well. I love sinking my teeth into businesses. This is one of the things that I love charts. Don't get me wrong, but I love like businesses. Like when I found Dutch Bros, I went bonkers. I went onto YouTube. I probably for hours was anywhere I could, accumulate information on Dutch Bros. I wanted to. Do I think they're a true market leader? No, but I think they have a business that has a model that could go up 1,000%. I know it, and get this one. I don't think that's a true market leader. I just think it's a business that's positioned well. So to give me a true, like perfect example, this is probably the easiest true market leader I ever saw in my life was Facebook. Who's Facebook's competition?
Yeah.
You know what I'm saying? When like it's got like Tesla for all these years never had any competition until now. You know what I mean? So like to me, that's so in analyzing, like I love this is one of the things why I think Bill O'Neill is a genius. I think the canceling system is genius. If you could really identify and do a good job of labeling true market leaders as little as possible, I think it's that's what gives the power to the system. And I'll make you laugh right now. I'm the biggest contrarian. I love to dismiss things. I love to be.
I know that very well.
I love to be a hater, and it's something that I've had to unlearn over the past 4 or 5 years. This actually gets to one of the lessons learned from this year. Is to really be into true market leaders. Like I'll give you an example. We actually talked about this. I think you bought NVIDIA this year too, correct? Yep. So that was one of my.
We all did.
Yeah, that was one of my success stories this year. I traded it. I didn't hold it the whole year. I traded it. I think 3 or 4 times. I can't remember. But again, I did real well with it. And they only have one competitor, which is AMD. But I also bought AMD too. But also the wind is at their back. And I mean, all we hear about chip shortage. You know what I mean? The whole world is telling you something that the chip stocks, there's something wonderful going on with chip stocks. And like something that's validated that much, to me, gets to be a true market leader. So everything has to align. And again, it's products, it's fundamentals, it's sales, it's chart. When all those things line up, that's when you go into it. But this is the big part of canceling that people miss, and me and Bobby talk about it all the time. Companies that change the way we work, live, and play. And it's separating a Dutch Bros, which is another stock I love. This is you're gonna like this one. I love because I know their product is great, and actually, me and Bobby have talked about this a lot. This is gonna actually be kind of comical. Is Shake Shack?
Okay,
I know it sounds crazy.
One of my favorites.
Yeah, but we talk about hamburgers. You know what I mean? It sounds ridiculous, but we both agree that they have a great product. I'm sure other people could, but again, its chart sucks. But this is a company that's on my watch list because I know someday this is going to be a company that is going to have a massive expansion and do well. Is it good? But is it a true market leader? You can't say it is because it has so much competition, but it could be a great trade or a great investment for a certain period of time. You know what I'm saying? Like there's a semantic. I know I'm probably kind of sounding like a hypocrite a little bit, but
I think
it's so easily identifiable.
I think people look at true market leader in two different ways. Because I know from just having this conversation with you personally, Steve, there's true market leader in saying that this is the leader in this current market uptrend. And then there's true market leader in the term of changing the way we work, live, and play. And like I said, having nearly no competition.
Yep.
So it's like there's two different types, and they're both important, but they're both two different things. And I think they also both need to be traded differently. And I think that's something that I know I've worked out in my head is being able to say, what's a true market leader? Like this might be the next Apple or the next Facebook or the next Google versus this is a true market leader. Okay, this is, let's say like a Zoom, something that just went on a complete and utter run last year, but like Zoom has a ton of competition and I don't know if Zoom might be a bad example, but
yeah, I was just gonna say they were a true market leader last year.
Yeah, but like a company that like they might not be long-term changing the way we work, live, and play versus just the leader in this current market.
Can I interrupt you because I haven't done that at all this podcast? Mike, do you ever listen to WFAN? Like Mike Francesa? No? Okay. So Mike Francesa is a sports guy, and they, in the off season, like from let's say February into March is probably the slowest time for baseball and football and everything. And they used to talk about not all pros, Hall of Famers. And Mike Francesa had this one saying, and I swear to God, it's like for one of the most opinionated sports guys of all time, it's brilliant. A Hall of Famer when you see him. You like I'll give you an example. Like you might not be a sports fan, but you're going to see someone and they're just going to stick out and you just know it. It's the same. And this isn't a gut. This is actually seeing the way their business is operating, the stock is operating, all those things. You just know it. And an example, like not that I watch CNBC, but these are the stocks that they're cheerleading a lot. But at the same time, and this is why I hate CNBC. At the same time, there's a true market leader. They get people on who are hating it. I remember when Netflix was in its heyday, and I loved Netflix. There was a guy who was going on. This is a $20 stock when the stock was at like 150 to 200, and you always get those kind of guys who are like trying to go against the grain, but yet you hear it and their arguments are compelling, and that can knock you out of some of these true market leaders. But let me digress again. Getting back to the point, true market leaders assert themselves, and if you look at it in a holistic fashion, and again, this is separating the chart and looking at the business and looking at what their competition is, looking at what their industry is, and all those type of things. That's when you really begin to see it. It just becomes super obvious if you're open to the idea. Like I admit, one of my biggest failings was ignoring some of the true market leaders with my biases, okay, especially towards companies I didn't like. You know what I mean? Like let me think of one. Oh, I'll give you one. This is a good one. I blew Microsoft. It should have been the most, if you work in a company, it should have been one of the most obvious trades, because Microsoft was the first company to go to the cloud with Office 360. And it just had an epic run when they were in the middle of doing that. But yet I ignored it because Microsoft, what new products have they come out with? It didn't matter. The industry changed, and you had all those, they had their cloud, was it Azure and everything else. It It's been a ridiculous run. But because I thought that they couldn't change, that was my fault. The greatest one of all time, and I don't know, I believe you're trading then, Mike, was Apple. I had this conversation with people in Twitter and elsewhere. When Apple had its run from 2003 or 4 till 2007 before it came out with the iPhone, there was not a more hated stock on Wall Street than Apple, because everybody was thinking this is the Apple of the 80s and 90s and not the new Apple with the iTunes and everything else. And people all thought, oh, iTunes is a fad. It's going away. Well, if it wasn't for iTunes, we wouldn't have the iPhone, because that gave them the capital to invest in it. And plus, at that time, if you remember, everybody started buying Macs again. So it wasn't just a one-trick pony. There was a lot going on there. But again, I'll admit this. I had massive biases at the time. So many people told me to buy it, and I just ignored it. And honestly, that'll never happen to me again. You just have to be open-minded and just ask. If someone brings you a true market leader or a stock that's performing, you got to continue to ask them, why do you like this? Why do you like this? And at some point it's going to click. Because again, it's your responsibility to do that. It's not the other person's responsibility to hand you something on a silver platter.
Yeah, and so like all these lessons, right? Like, so you could have had this trade and look at this and be like, oh my God, like it broke out and I missed out on how many thousands of percent has Apple run from there, and never look at the market again.
Yep.
But you chose to take the silver lining in there. You chose to take this as a great lesson, because how many more true market leaders, how many more opportunities are there going to be like between now and for however long you're doing this?
2 weeks ago, Jim Ropel was talking about on the IBD podcast. It was
just going to say
it
that.
was awesome. He's like, I don't know how old Jim is. I'll be nice
like
and just 50, call him 50. I'll
40.
say he's 50. We'll give him the benefit of the doubt. He's 50. He was saying there's going to be like 15 market cycles. There's going to be 6 true market leaders in that time. Do the math, whatever it accrued up to. He did the math. I'm too stupid to do it on the spot. But, there's going to be hundreds of true market leaders between now and the next 25 years. Even if we go into the inevitable, cleansing that every, prognosticator in the world on Twitter and on CNBC is telling us, So, that's what makes this whole thing so exciting.
Yeah, it really does.
And Reddy, this is a great topic. The metaverse. I mean, to me, holy cow. We were talking about that at the meetup that you had.
Yeah.
That was like the big topic.
Yeah, NFTs.
Yeah.
All of that.
Yep.
Oh my God. That could be a conversation all to itself.
100%.
Yeah, guys, I definitely want to have you guys back again at some point.
Absolutely.
But let's keep going.
All right.
Let's keep going. So biggest successes, worst failures, lessons learned in prep for 2022, and plus we've got some other questions coming in as well.
Let's get the questions.
Let's see. All right. Yeah, here from Confluence Trader, how to know which market condition is best for your setup.
For me, I think it's a lot about looking at the stocks out there. Like, there's going to be market environments where the types of stocks and the types of charts or whatever strategy you're doing, whatever criteria you're looking for, there's going to be environments where you see tons and tons of opportunity out there, and there's going to be environments where there's very, very few opportunity. And I think that's a huge indicator. Like, if I'm doing my weekend routine and I'm looking through stocks and I'm finding like a few setups and they're okay setups, like, I know like this might not be the perfect market for exactly my style of trading. Then there's going to be other markets where like there's just setup after setup after setup after setup, and I'm having more trouble narrowing down what stocks I'm interested in than I do finding stocks. And that to me is a huge indicator of the type of market that we're in. This year was a perfect example, and contrary to last year, it's like if you're looking for real true base breakouts last year, there was just a ton of base breakouts and they were just going on complete and utter runs and they were all working. This year definitely seemed a little more of like a swing trading style. Like there were these like quick pullbacks and then like rapid up runs, and it felt like that style of trading was more successful. So I think it's big to just say, what is my strategy, and do I have a lot of opportunities in front of me, or is the opportunity sparse? And that triggers in my head type of environment I'm in.
Steve?
I think it's just Mark Minervini loves to say this. He tweets this out all the time. I think it's actually one of the insights that I give him a lot of credit on because he's highlighted this for me. It's what your past trades that you've most recently done. How are they setting up? How are they performing? That's going to tell you exactly what you need to do in your next trades. Because if you have a bunch of trades that are doing poorly, you're going to want to change your strategy. If you have ones that are being very successful, like Michael was saying early, I think from October to November, you had like 7 or 8 trades in a row that were all successful. Well, you're going to want to continue to keep doing whatever you're doing in those prior trades. So I think that's, there are certain times that the market kind of tells you what to do, like on a follow through day after a hellacious correction. And a lot of leading stocks are beginning to perform. It begins to be pretty obvious. Other market conditions, it's just as I said before. It's what the trades that you've just previously done, how are they performing, or what are they doing, and that's how you judge your next trade.
Yeah, totally agree. And yeah, Confluence Trader, you've been on the live streams before, but like this is the spreadsheet that like you could create something very simple like this. Like I know that it looks complex, but one of the biggest things in here, what I'm tracking is the open trades, right? So how many open trades that I have, right? So and building upon success. So if you're tracking something every day, and like there's a bunch of columns in here, right? Like it go through the whole alphabet, looking at the top over here. But it like this takes me like only 5 minutes, less than 5 minutes to fill in each column every single day. So whether you're full-time, part-time, like you have 5 minutes to track something that like this if it's going to help you. The number of your open trades and how your open trades are performing. So if your open trades are like over here, like this was the beginning of October, right? Like even though like I had 5 open trades on, I carried into the weekend, only one of them was a winner.
Right.
And so at that point, I wasn't looking to scale up yet, but I was comfortable in holding those select positions because each one of them, was showing strength. Like they had weakness, but the weakness was being bought. They were closing at the top of the ranges, bouncing off of support, moving averages, all that stuff. So then as those trades start to work, and then we're looking at Tuesday and Wednesday and it's starting to gain traction, that's where you start to add more positions. And that affects, for me, I'm adding more positions. I might be adding size if I'm finding a high quality setup, right? So part of what we want to look at too is not just that we have a setup, but is it a high quality setup? And so we want to have some kind of a mechanism of how we're going to judge if something is high quality or low quality. Breadth is important too, like your own watch list. I think too, and like this is something that I got from Mark and some of the people from the IBD meetups, like way back when too. But your own list, your own watch list. There's such a wealth of information in there because that's basically telling you how the market is treating the stuff that you're interested in. Like if the stuff that you're interested in is taken off, then a good time to be in the market. If the market's slamming everything that you're interested in, then well, maybe not. And that's one of the reasons why, like over here, right? Well, when we transition from November to like the mid-November, right? December, like in this period, like I'm not picking trades because there's like if I'm looking at a bag, right? And I'm gonna reach my hand into the bag and I'm gonna pull out a winner or a loser. Well, over here, there's only a 30% chance of me pulling out a winner. Over here, there's only a 15% chance, 11% chance of me sticking my hand in and pulling out a winner. I don't like them odds, so I'm not going to be placing anything. And so that's why, like, I was sitting in cash. And then when things started to work, okay, let me start to put on some trades here.
Makes a lot of sense.
Yeah, absolutely.
We are already over 2 hours.
I feel like I'm on Joe Rogan right now when he says that.
Yeah, right. Yeah, guys. Like I don't want. Like I know that we said we would go until New Year's, but like
we're almost there.
we're almost. We're almost. How you guys feeling? You have time for another question or two?
Yeah, absolutely.
I'm good. I'm fine.
I was gonna say I'm shocked that I haven't have to go to the bathroom once yet.
Yeah, me too. I've had a cup of coffee and I'm like, by the time I'm done with this.
Yeah.
Here's another one from Confluence Trader. Great question. Which is best pyramiding or scaling out in an intraday trade? Do you guys do day trading or intraday swing?
No.
Yeah. Okay. I do, and I'll say this: like there really is no best, right? Like what's best is what works for you. One of the lessons that I learned super duper early on from after reading Market Wizards, right? Like you'll find one guy that trades one way, you'll find somebody else that trades the complete opposite way, and yet they're both sitting in this book called Market Wizards, and they're some of the most successful people on the planet. So the thing to look at is what works best for you. What are you most comfortable doing? If you are not sure and you want to test something out, then you don't have to reinvent the wheel. You could see like what some people that you like, know, and respect have done, something that resonates with you. Test it out, see how it fits. Give it a chance to play out, right? Like so. Earlier we were talking about what was the question? It had to do with money and with looking at trades. So looking at a block of trades, right? So try to get a little bit of statistical significance in there. To get statistical significance, you need 100 trades. I don't think that you would need to necessarily do that for this. Like if you get to like say 10 trades or 20 trades and you're like, this sucks, then yeah, you don't need to go to 100 trades. But if it feels good at 10 or 20, like don't say this is the best and start throwing more money into it. Then you continue your testing until you have like a truly statistical significance, right? Like you're getting up to 50, like you're halfway there. Then like you start putting on some more. Like that's how you're going to gain confidence, and you're gaining confidence because you're actually doing the work. You're doing the trading. You're doing everything that's there. You're tracking your trades, all of it. So that's how you figure out which is best, pyramiding or scaling out. What I personally do, I like to put on my full position in one shot, and then I'll scale out on the way up. I will do an add-on buy if a fresh setup presents itself. A good example of that was, I believe it was in coin. If I could share this with you. So what I did here, I bought this break. Like that. This goes into the success category too. Like with buying this, right? So buying that breakout, I missed this, but it was on the radar, so I got in right over here, right? So rode this, then it started to have a little bit of a flag right here, and that was my add-on buy. That was my add-on buy, and I sold the add-on ahead of earnings.
Brilliant.
So when there's a fresh setup, that's what I'll use to to, like, if you're kind of thinking of it as pyramiding, that's how I would pyramid in. But when I'm doing my initial buy, I'm buying all at one shot.
Yeah, I'm kind of a buy at one shot, but actually pyramiding is one of the things on market leaders that I have to get better at. I think it's one of the harder things. One of the best trades I made in my life. I performed it perfectly, but since then I haven't done it as well. But it was also no, I'm being honest, it was a company called FedNat. It's an insurance company. This is going back years ago. FNHC.
Do they still exist?
Yeah, they do actually. If the stock's at $1.40, I'll tell you when I bought it. I think it was like 2011 or 2012.
Well, what's the ticker of this thing?
FNHC. I'll tell you exactly when I bought it.
FNAC.
HC.
HC.
Yep. So I can tell you the exact day I bought it. I bought it. Yeah. I bought it in
Buy and hold, right?
No, please. August 31st, 2012.
2012. All right, let me go to the weekly. 2012.
Yeah.
So back here.
Yeah.
Oh,
and then
that's a nice little run, isn't it?
Yeah. But the thing was, if you notice, it had a lot of little shelves, and I kept on adding to it, and then I eventually sold it in the probably around like in the mid-20s somewhere. So yeah, it was just an easier stock to hold. Like it actually, you know what I mean? It allowed itself to be continually to be bought as it kept on moving up and up and up. So it also made it easier. It was a company whose earnings changed and it was trading below book value, yada, 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 like one of those type of things. But yeah, so that I always found to be what I would like to replicate. But the thing is, a lot of true market leaders don't go up that slowly. You know what I mean? It usually happens a little bit more over time. Yep.
Matt had a good question. Matt was saying, so right now my trading, I only make a plan for a new trade when the market is closed. Everything moving and jumping, etc. I know my mind just can't think truly clear. So the question then on it.
I agree. I know exactly what he's saying. I completely agree.
I agree too. I'll be lying if I said that I didn't stray from that and lack discipline and occasionally see something pop up on my watch list that I didn't really plan out and make a move. But I think that's a sound way to go about it. 100%.
You know what? Having a job, we're probably more like most of the listeners. And this is one of the things, like you only have a limited amount of time to look at the market during the day. And I try to, if I'm going to make buy and sells, I try to do it at night. But if I have to make an intraday call, I will, but I try to do it as minimally as possible.
Yeah, I'm the same.
Really?
all my trading, really all the plans are done either at night. Sometimes they'll be done pre-market, but even the where I'm going to exit a trade, right? So part of what I'll do, like I'll there's like the way that I see it, there's 5 ways that, or really 15 ways that a trade can move, right? So let me draw over here, right? So the way that a trade can move, like it could rocket up, it could kind of meander up, it can drift sideways, it can drift down, or it could sink like a stone, right? So I'm trying to think through, well, what happens in each one of these scenarios if the trade that I'm in does it today? And there's a big difference between each one of these in the trade closing at its high, closing somewhere in the middle, or closing at the bottom. Like I'll think about this very differently if it rockets up but closes down here.
Right.
I'll think about this very differently if it rockets down but closes at its high. So I'll think through each one of those scenarios and come up with, okay, if it does this, I'll do that. If it does that, I'll do this. And I'll write that out for every position that I have. And I'll do that in the morning because that's when I tend to be the most energetic, right? Like I've meditated, I've gone to the gym, I've had a good breakfast, that stuff. And I'm in the right headspace to think through this kind of stuff. Because at the end of the day, like, who knows what kind of shit's going to fly at us, right? Like, there have been times too, like pick up my daughter from the bus stop, we're here, we're doing homework or whatever. It's time to check the market. It's about like quarter to the close, and so rather than having to think through all these different scenarios, all I have to do is look at a piece of paper and say, okay, this is what the plan is, and it's just execution time. That's it.
Yeah.
I know exactly what you're saying. Yeah, that's exactly 100%. How you do it. Yep. Textbook.
Just to clarify, because I know this Tortoise King wrote Disciplined Mind Trading says not to make a watch list till the weekend so your emotions don't affect your emotions. I wouldn't say not to make a watch list. I think it's just that's where the brunt of your work is done. Making a watch list when the market's closed, I think would be a better way to say, because on a daily basis, I'm adjusting my watch list. I just wanted to clarify.
Yeah, my watch list changes daily.
Yeah, daily.
Do you keep track of your watch lists, as they're changing, or is it kind of static and like when something goes off, like it's off?
Yeah, once it's off. But you know what it is? It depends on how the market's performing. There's certain times I like to just completely purge my list. I'll give you an example. You were pointing out that November timeframe. During November, right, I tried to purge my list as much as possible because I only wanted true leaders. I wanted stocks that were holding up through that little bit of a downtrend, and I didn't want stocks that were getting clobbered. Like maybe a company, although it wasn't even on my last watch list, but it's just the first one that comes to mind, like a Peloton or something like that. That I just wanted those stocks that were performing really awfully off my list.
I definitely just took a note and said keeping track of watch lists. I think I'm going to start exporting some of my watch list into an Excel sheet because I love that idea.
Yeah, no, it's a great idea.
Because how often do you come across a stock, put it on your watch list, don't decide to pull the trigger on it, and you kind of lose sight of it. And I think that's something I want to keep track of. So I'm sure there's a lot of stocks that I've said I might pull the trigger on this week, and maybe I didn't, and I probably missed something. So thanks.
Do you use TradingView?
No, I use MarketSmith and Thinkorswim. I've played around with TradingView, but I have not set it up completely to where I feel like it's functioning the way I feel comfortable.
One of the cool things with TradingView is that they have this little publish button up here, and you don't need to publish it to the world. You could publish something privately, so it could end up acting like your own personal journal. So like over here, right? Like I'm looking around the light. That's why I'm going out like this. Like there's all these trades in here. Like so, here's one that I didn't take, but I wanted to keep track of it. So it's there, and like I could see like what happened after this trade, right? Like so it'll save it from that day, and then you could just play it forward.
That's awesome. That's a really cool feature.
Like of all the charting platforms out there, like they're far and away my favorite.
Yeah, I had done a huge long stint of research and thinking about different platforms, and every single person I asked said TradingView. So I dabbled in it, but I haven't kind of committed to really using it yet.
I'm a boomer. I just use MarketSmith.
You just use graphing paper.
Yeah, exactly.
It worked for Darvis.
Yeah, you're right. Steve's calling up his broker. What was the high, the low, and the close for today?
Well, I'm gonna have to leave soon. I got to go dance.
Oh my goodness.
I agree with that statement. Oh my goodness, watching me dance.
Oh my God. So, any closing thoughts? Any closing thoughts for 2022?
For 2022, going into 22, I think the biggest thing I have to say is just like no matter what level of trading you're at, it's just always learning, always making that improvement. Like you're just never done. And no matter how good or how bad your trading may feel in the current time, you have to, like Steve just talked about, like resetting his watch lists. Like sometimes you just got to reset your mindset and just say, all right, no matter how good or how bad it is, when you start feeling those emotions go one way or the other too high, just take a quick breath and just say, all right, let me reset myself, step back and take a look at what's going on and take it on from there because, there's always another big stock around the corner and you can always be a better trader.
Yeah, for me, just keep doing the work. Stay focused on canceling. If that's your system, whatever your system is, be true to that system. Have the confidence in that. Ignore the haters. Ignore the people, giving you their 2 cents, especially at cocktail parties and elsewhere. We only get to hear them brag. We never get to see their losses. Like you had a wonderful spreadsheet there. I guess it was at 11% at one point. On one of the trades, nobody will ever tell you that 90% of their trades are in the red at that point. And it just keep grinding. I mean, yes, you do hear the stories of someone buying one of these stocks and getting rich, but that's not the typical road. Usually for most people, it's a grind. It's going to be multiple trades over multiple years and just keep working at it. And, the more that you participate in the markets and do the work and get the experience, the easier this gets. And the more confidence you'll have in yourself.
Fantastic. Aside from your YouTube channel, where else can people find more of you guys?
Both of us are on Twitter.
Steve and I. Trading YouTube.
Yep. So Steve's probably more predominantly on Twitter. I'm on Twitter, Instagram. That's probably the 2 main platforms. And then one of the other things that honestly I probably check a little more frequently is we have a Discord channel. So it's just like a free Discord channel. And all of this stuff is linked in any of our videos for anybody who's interested in following us on anything. But
so
yeah, they
would just go click the video link and it's in the description.
Yep. Yeah, we have both our Twitters, our Discord, our Instagram. I think there's my email, which I don't think anybody has ever contacted. I think I've had like 4 emails come through there. Most of it's through social media. But yeah, all those ways are great ways to reach out to us, and we're more than happy to communicate and answer with anybody.
Awesome. Yeah, and I'll link all that in the description for this video and podcast when it gets blasted out to Spotify and all that stuff too. Awesome, guys. This has been amazing.
Yeah,
I'm really thrilled that you agreed to come on.
No, I'm glad you invited us. Yeah.
Yeah. Great.
So now when we have the meetup, we're going to have nothing to talk about.
I think Steve always has something to talk about.
Wow.
Yeah. Well, we could all go on and on for hours and hours.
Wow.
Yeah.
All right, guys. Happy New Year. Everybody that's here with us, thank you so much for being a part of this. It's been amazing. You've had awesome questions. And here's to a happy and profitable New Year.
One last thing. Endure the pain of discipline.
Stay disciplined, everybody.
Peace out, everybody. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Merrill Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.